This NEO 45-minute Power 1.01 alert is really a great example of a few different things that I'd like to share. Let's just take a look at what's happening here. We've basically completely nuked. NEO is down 40% from its highs here. Bitcoin has come down from 70 to 60 over the course of 2 days. We're on the verge of World War III. Numerous alerts 24 hours ago did not play out. You may have, if you had traded them all, you would be in the middle of a losing streak right now. Okay, one thing we know about crypto, it's not all just going to go to zero. Even if it is, it's going to bounce first. So we can make money on those bounces. The alert comes at the close of this candle here. You can see it lost the SMA 9 magenta. The yellow is the EMA 21. It lost the SMA 9 magenta long ago. It made its first attempt here and was quickly pushed back down. We get some kind of obvious region of support, double bottom, whatever you want to call it. Nice looking strong candle closes above SMA 9 for the first time. Now, this happens again and again and again on bounces and reversals. The next candle comes down and checks in with the SMA 9. If you're looking for the perfect entry, it would have been just above the SMA 9. But in this case, even if you had aped in immediately at the time of the alert, if you're using the stop loss close below method, of course, no candle closed below on the 45-minute time frame, so you're still in the trade. And that's one reason that we, as a team, are willing to put up with these larger individual losses, because it allows us to capitalize on moments like this. So the very first candle goes up and takes out TP1. We could exit there and lock in some profit and then re-enter. Or we could go into this looking at it as we did, which is basically, look, we're down 40%. Bitcoin has finally found some sense of stability and perhaps putting in a bit of a bounce of its own on the lower time frames. TP3 here is only a 8% move from our entry. So an 8% bounce after 40% to the downside, of course, in crypto, it's nothing. Seeing Bitcoin put in some stability, while at the same time our NEO chart looks like this, reclaiming the SMA 9, testing the SMA 9, and then getting the sideways action, this gave us confidence for TP3. Had you sat here watching every candle, our rule would have been a close below SMA 9 and consider getting out, and open and close below SMA 9, then definitely get out. You can see price action was guided by the SMA 9 here all the way up. So what was the result of this trade? Again, seeing the 40% drawdown. At the same time here, we're looking at the Joule. We got a nice Joule alert here, blue, pink, yellow. That's going to be the Power 1. We've got another video going out soon explaining that. And then you see it spreads out here, all increasing. We flipped to white here for a second, but by that time we've got support by the DMI turning green. So there's nothing here telling you to exit. Had this turned white and then the next close had it turned dark blue, perhaps we would have thought about exiting in profit at that point. But if you were just using the Joule to manage this trade, even right now, there's nothing telling you that it's time to get out. So what was the result of this trade? We managed to stay in it with this extremely tight stop loss due to our stop loss close below method. We went up and took out TP1. We could have re-entered, or we could have just targeted TP3 from the get-go based on everything that I've described. This candle here came within fractions of a percent of taking out TP3. No need to panic based on the Joule signature and also based on the SMA 9. We come down, test the SMA 9. Here we're now actually getting the SMA 9 crossing above the EMA 21, which could be good for some further upside. Had we exited at our TP3 as planned, it's basically a 15 RR, 14.98. So $100,000 account, $1,000 risked, $15,000 gained. If you're managing risk and on all your other trades, you're not revenge trading and you're not trying to make it all back at once and you're not risking 20% of your account in a single trade, trying to be the next crypto Twitter influencer. If you're emotionally detached, you could have come into this, and maybe you did, with 10 or 12 losers in a row from yesterday. And in this single trade, those losses have been recovered and then some. If you had spotted this strength here with the price touching the SMA 9 and getting pulled all the way back up and decided, you know what, I want to go after the next obvious area, which is right up here. You can see other people had the same idea, so you got extremely close. But even now you could exit and it's something like a 18 RR, even if you just hit market sell right now. So that's the power of the risk-reward ratio and also the power of understanding when price is more likely to bounce, which in crypto, it's after a big drawdown in the midst of a bull market where people are looking for better prices and believing that it's going to go back up. In this case, we really prefer the lower time frames for these bounces because the lower time frame is always going to have a smaller move in terms of percentage in order to get that same high RR. So on a 4-hour time frame, we might have needed to see a 30% move to lock in a 15 RR. Here, all we needed was this stop loss basically to hold and then price to move 8%, and we have 15 RR locked in, possibly 18 or 20 if you played it a little bit differently.